Hello, this is the trade site Forex market preview and international economic data roadmap for the week beginning technically Sunday, the 4th of September 2016, ending Friday the 9th. But of course, keeping in mind that we do have Monday here in the U.S. as Labor Day. Markets are closed, or the U.S. banks are closed, stock market's closed. So we'll have no calls Sunday. Mark may still post the levels. We'll see. But let's talk about the rest of the week and what's due out. Oops, ignore that. Here's a look at the dollar index daily chart. As you can see, pretty much mid-range for the last 6 months in a pretty narrow range. Not doing much. There's not. I really would like to have on these weekend analysis more things to say, but unfortunately, Forex has been kind of flat, and the ranges have been poor for August on top of it, except for 1 or 2 days. So, we do tend to. We're half size right now because of these summer doldrums, the August doldrums. Things do usually pick up somewhere here after Labor Day. I'll wait until I see a couple of days of better ranges before I tell people to start going back up on your size. So we'll talk about that in the daily and weekend reports. Here's a look at the euro. As you can see, now this is probably 8. Let's do projection mode. 8 candles down. So one more candle down will be a 9-bar startup phase. And look how it's settled right on that red static trend line, but again in a narrow range. Pound has been very flat ever since Brexit. So you lose 2,000 pips and then you go sideways for 3 months when you vote poorly. Here's the Aussie. 13 sell signal about 3 weeks ago was the high, rolled over. Target of that should be one of two things: the red static trend line or a new 9-bar startup phase to the downside. We accomplished both on the same day. That is what we call technical market activity. Pound yen has curled back up as well here. So the pound's starting to regain a little steam at least. Euro yen up a bit. Pound Swiss also up a bit. And here's the New Zealand dollar, which we track near highs. Good for them. All right, let's take a look at the intra-week action. So we're looking at 30-minute candles. And now let's, just for the initial conversation, ignore the spike Friday. Take that out. And high to low, get this, high to low for the week, if you take that out, is basically 90 pips. So the euro trades typically 100 pips, 120 pips per day on average. Entire week it trades 90 pips. And then there's one extra 40 pip move for about 30 minutes up and back this morning. That's it. Why is that? Because we're in the August doldrums. That's the definition of doldrums. So the market's not moving. Pound, most of the week. So the first 3 days spent in a 90 pip range, and then a gap up on some news. Midweek, that's pretty unusual. There's actually a double gap. That's pretty cool. And then, so when you take the whole week, we've got almost 300 pips of range. But again, most of it's in 100 pip range, and then an untradeable gap for 100 pips, and then another 100 pips. So not exactly your ideal week on the pound either. Just look at the Aussie. High to low, 100 and something pips. All right. So having said all that, you get the point. We're pretty flat. Let's take a look at the data coming out this week. And again, we'll just start to see when ranges expand. That's when we'll start to raise our size. Sunday, G20 meetings, AIG Services Index out of Australia, average cash earnings out of Japan, more Australian and New Zealand news, all of which doesn't matter because Monday is a holiday here in the U.S. On Monday, though, early, Spain, Italy, France, Germany, Europe, and UK, European broad sector and UK, all released their services PMI data. They go about 15, 30 minutes apart each. Canada is also on bank holiday on Monday, so things should be pretty flat unless there's some news out there in the world. Current account out of Australia that night, 30-year bond auction out of Japan, rate announcement out of Australia going into Tuesday. Switzerland's GDP, German factory orders, CPI out of Switzerland. Some big data out of Switzerland back-to-back there. Retail PMI out of Europe and the revised GDP for the second quarter, I guess it would be, right, out of Europe. 10-year bond auction out of the UK. Final services PMI data here in the U.S. on Tuesday morning. U.S. ISM non-manufacturing PMI, the IBD economic optimism number, labor market conditions. Those are all the U.S. numbers in the morning on Tuesday. Price index out of New Zealand. Manufacturing sales out of New Zealand that night. GDP out of Australia. Going to Wednesday, leading indicators out of Japan. German industrial production, French trade balance. Halifax HPI out of the UK. Manufacturing production and industrial production out of the UK. German 10-year bond auction, not a big deal. Wednesday morning here in the North American side, we've got a rate announcement out of the Bank of Canada. JOLTS job openings here in the U.S. Beige book in the afternoon here. Current account and GDP and bank lending out of Japan at 7:50 p.m. Eastern Time Wednesday night. Trade balance out of Australia and then China. We've got French final non-farm payrolls out of in France, obviously. Minimum bid. This is a rate announcement out of the ECB, 7:45 a.m. on Thursday morning. Building permits in Canada, capacity utilization rate in Canada, unemployment, that's the weekly number. Natty gas, that's the weekly number. Crude oil, that's the weekly number here in the U.S. Consumer credit in the afternoon. Money stock out of Japan. Home loans out of Australia. That night, CPI and PPI out of China. And then we go to Japan's tertiary industry activity on Friday. Unemployment rate out of Switzerland. German trade balance. French budget balance. French industrial production. UK goods trade balance and construction output. The Eurogroup meetings, U.S. just a speech, no real data. Wholesale inventories here in the U.S. The unemployment rate out of Canada, and housing starts before the stock market opens on Friday. And that's it. We wrap up the week. So none of our big three, since we had two of them this last Friday. No Fed meeting. There's the Australian and the Canadian rate announcements, and the ECB actually. So there's a few rate announcements. That's about it. The more important thing is, when does everybody come back? When do ranges start to expand out? When does trading get back to normal so we can start to really see some opportunities here in the market? That's what we're looking for more than anything. We'll guide you on that as the week progresses. Charts, as usual, brought to you by eSignal 12. If you've not taken a trial of our services, feel free to do so. Now's a good time, now that we're getting out of the doldrums. We'll help you out for a couple weeks. Have a great trading